Hello, I greet you all. My name is Mr. J.M. Kimani, your lecturer in Management Accounting. Welcome to Lesson 2 of the topic Budgeting and Budgetary Controls. This Lesson 2 will feature the functional budgets, which are already explained in our Lesson 1. Now, the first question comes from May 2011. Question 3. May 2011, question 3. So part A reads that, describe the following terminologies in relation to preparation of a budget. Roman 1, budget period. Roman 2, budget committee. Roman 3, budget manual. Then part B, Kimani and Otieno, who are in partnership, wish to prepare a budget for material requirements. They have requested for your assistance and presented the following information. 1. Sales budget for the 5 months from June 2011 to October 2011 is as follows. You have June 10,800 units, July 15,600 units, August 12,200 units, September 10,400 units, October 9,800 units. Number 2, finished goods at the end of each month are to be maintained at 25% of sales estimate for the following month. 3, 2,700 units of finished goods were available at the beginning of June 2011. Number 4, there is no closing work in progress in any month. Number 5, each unit requires 5 kilograms of material Q and 4 kilograms of material P. Number 6, materials at the end of every month are to be maintained at half of the requirements for the following month. Required, Roman 1, production budget for the month of June, July, August, and September 2011. Roman 2, material P, purchases budget for the month of June, July, and August. Roman 3, material Q, purchases budget for the month of June, July, and August 2011. End of question. So first of all, the requirements of that part B, Roman 2 and 3, we are asking the material P and material Q usage budget. But the correct requirement was supposed to be purchases budget, not usage budget, purchases budget. Then in part A, which was asking us to write some short notes concerning the budget period, the budget committee, and budget manual, I have already explained that clearly in lesson 1. So we just go to part B, where we to prepare this budget. We are asked to prepare the production budget. We already have the sales budget. When they are telling us the units, they are telling us part of the budget. Otherwise, we require the selling price so that we can have the complete sales budget. So we're not asked to do the sales budget. We don't have even the price. So we can just start with the production budget. So you have number 1. This is production. So budget. So we have details. We have been told to prepare the budget for the month of June, July, up to September. So we have June, July, August, September, and let me have October because of requirement in the other budgets. So we are going to have the understanding of the production. The production is actually a case where we want to know, as per the sales targets, can we be able to produce and can we be able to meet the sales target? So you are going to prepare and produce what is expected to be sold. But again, because of the stocks, we may produce more or less than what is to be sold. So we need to have some understanding here. So it is, you take from this I'm giving a hint. You take from the trading account where we have the opening stock, we have the production, then we have the other side, the sales, and you have the closing stock. So it means we want to know this production, and as long as we have the opening stock, we have the closing stock, we have the sales, then you can use these three and give us our production. Normally, you take the opening, you add the production, you less the closing to get what? The sales. But this time it is the production don't have. So what we do, we are going to take these sales, and then the stocks will have the opening with negative impact while closing with the positive impact. So that now our final answer is what? The production. So we're going to have here, this is sales, this is opening stock, and you have closing stock. Now, the sales, as we have been given there, the forecast is actually a total of 10,800. This 10,800 for June, 15,600 for July, 12,200 for August, 10,400 for September, and you have 9,800 for the month of October. Then the closing stock, we have been told clearly that closing stock in information number 2, that at the end of each month are to be maintained at 25% of sales estimate for the following month. So 25% of the following month. So meaning when we are doing the closing stock of June, it should be 25% of the sales in July, which is 15,600. This 25% of sales in August, 12,200. This 25% of sales in September, which is 10,400. And 25% of sales in October, 9,800. That's what you have. So the answers to this are, so in June, the closing stock shall be 0.25 times 15,600. This is that 900. 0.25 times 12,200. This is 30,50. 0.25 times 10,400. This is 2,600. 0.25 times 9,800. This is 2,450. That's what you have as the closing stocks. Then we look at any opening stock you have been given in the question. We have been told in the month, in the information number 3, that 2,700 units of finished goods were available at the beginning of June. So 2,700 were available here. This is 2,700 as opening stock in the month of June. Then you require to understand something, that the closing stock of a month is the opening of the next month. Therefore, these 3,900 for June become the opening stock in July. 30,50 for July become the opening for August, 30,50. 2,600 for August become the opening here. So this is 2,600. And of course, 2,450 for the month of October as the opening. Then now, we require to determine the production And as you see from my trading account, it suggests clearly that we are supposed to take the sales, we add the closing stock, then we subtract the opening. That is one of the reasons we subtract the opening. Another reason why we are going to subtract the opening is because the opening was not a production of this period. Like now, this 2,700 was not produced in June. It was produced previously in the month of May. So because of that, now we are going to have it as negative. This as negative because they are not the productions of that month. They are productions of the previous month. So with that, now we can be able to get our production here. This is production. So which is going to give us, like the first month, June, we have 10,800. We subtract 2,700, we add that 900. This is 12,000 flat. We have 15,600 in June, July, minus that 900 plus 30,50. This is 14,750. The other one is 12,200. 12,200 minus 30,50 plus 2,600. This is 11,750. 10,400 minus 2,600 plus 2,450. This is 10,250. That's what was required. For October is just to assist us with what we are expecting, but it's not complete because we want to know if we knew the sales for November, we would have recorded the closing stock here. But now because we don't have, we just leave that. In any case, we were asked the production for the month of June, July, August, and September, which we have answered. That's all. And that is a solution for number 1. Number 2 is about the purchases budget. So how do we determine the purchases budget? So I'm going to have, this is number 2. This is material P. Purchases budget. We have details. We have June, July, August, September. We were asked which months. June, July. In fact, we are asked June, July, and even August. So even September is not in our requirement. So you have June, July, and you have August. Now, how do we get the purchases? Now, same case with how I explained about the production. We do have a T account for the trading account, assuming. We do have the opening stock of raw material. We do have the purchases of these raw materials. We do have the usage, not the sales, because we're not selling the raw materials. We are using the raw materials in the production. Then we do have the closing stock. Now that you don't have the purchases, we do have the opening and the closing stocks of raw materials. We are going to determine the usage, which is possible. The usage is actually taking the number of materials number of materials required per unit. This is, let's say, kgs per unit. You multiply by the expected production, this times production. That should you want to know the usage of materials. We do have the production already. That production shall be produced using materials. And we do have the materials required for each and every unit. So we need to do some calculation here. So come and have here usage. So usage, we are told in the information number 5, each unit requires 5 kgs of material Q and 4 kgs of material P. So I mean 4 kgs. So I'll be multiplying the production of June by 4 kgs, July by 4 kgs, like that. So I'll be having 12,000 times 4 kgs. This is 14,750 times 4 kgs, because I'm doing material Q, material P. Then I'm having the 11,750 times 4 kgs. So this will give us now our materials required or used in the production shall be as follows. We have 12,000 multiplied by 4. That means we need 48,000 kgs. This is 14,750 times 4 kgs. This is going to be 59,000 kgs. And we have 11,750 times 4 kgs. This is giving us 47,000 kgs. Now we do have now the usage. So we just need to subtract the opening and we add the closing. So you can have here, this is opening raw material. Then you have closing raw material. Now our closing raw material, we have been told in the final information, what is expected. We are told there that materials at the end of every month are to be maintained at half of the requirement of the following month. Half of the requirement. Like now, if we are in June, the requirement is what is expected in the month of July, and the requirement is this 59. So we need to have half of that 59. So we can have here half of 59,000, half of 47,000, and then half of, what do you think is the requirement for the month of September? Should you have September here, even though not us? If you don't know what is we require, in September, it is 10 250 units, and each unit is 4 kgs. So this means we require how many kgs? This is 10 250 multiplied by 4. This is actually 41,000 kgs. So we must maintain half of this 41 in August. So half of 41,000 in August. That means we can now have our closing stock, which is 59 divided by 2 is going to be 29,500. 47 divided by 2 shall be 23,500, while 41 divided by 2 shall be 20,500. Then the opening stock. Are we told the opening stock of these raw materials? We are told there that so information number 2 is talking about the finished. Number 3 is talking about the finished also. Number 5 about requirements. Number 6 about closing. Now we are not told about the opening stock of the month of June, but if you maintain the policy of maintaining half of the next month requirement, then that policy shall be used here. That while we are in the month of May, the closing stock of that month must have been the half of what is required in June. Just like the way in June, the closing stock is half of July. So in May, the closing stock must have been half of June, which is half of 48. And that closing becomes the opening. So therefore, half of this is 24. Half of 48 is 24. Then now, we remember the closing stock of a month is the opening of the next month. So therefore, this 29 should be here. 29,500. And this 23 should be here. That's all. Then now, remember how to determine the purchases. We must subtract the opening because number 1 of the formula we're having here, And number 2, because this opening was not a purchase of this month. So like now this for 2024. And then we have 29,500 and we have 23,500. So these are to be subtracted. They are not a purchase of the current month. So that we can have now finally our purchases. So this is purchases. So you can have the calculation as follows. We have 48,000 minus 24,000 plus 29,500. This will give us 53,500. Then we have the next month is 59,000. We subtract 29,500. We add 23,500. This is 53,000. And then you have August. We have the 47,000 minus 23,500 plus 20,500. So this is 44,000. That's all. Now you realize something, that depending with our policy of stocks, we may end up purchasing more than what is required. Like you can see we require 48, but we purchase what? 53. We end up purchasing 53, though we require what? 59. That tells you what? We may have maintained more stocks. If you maintain more stocks, the next period you are going to buy less. Again, if you buy less and you want to maintain more stocks, you may end up buying more in the next or less in the next month. So therefore, it's a policy of stock keeping, and that's how it is as far as material P is concerned. We do the same thing, but now for material Q. So you can have here, number 3, this is material Q, purchases. Budget. So you have the details. We have June, July, we have August. So that now we can have the usage for this material Q, the usage. So usage shall be, as we have done in material P, this time material Q is used as 5 kgs, 5 kgs of material Q. So we are going to have the requirement of 12,000, but now times 5 kgs. This is 14,750 times 5 kgs, and this is 11,750 times 5 kgs. Remember, even September we require just because of our working, so we require 10 to 50 times 5 kgs. So that now we can have the total materials used or required to be used. So this calculation will give us, this is 12 times 5, this is giving us 60,000 kgs. 14,750 times 5 giving us 750 kgs. 11,750 times 5 giving us 58,750 kgs, and 10 to 50 times 5 giving us 51,250 kgs. So with that now we can work with the opening and closing. So this is the opening of raw material, and then you have closing of raw material. And we are told that closing of raw material is going to be maintained to be half of the next month usage. So like this will be half of this 73,750, half of this 58,750, and half of this 51,250. So with that now we can be able to get our closing inventory. So this is 73, 750, 73, 750. You divide by 2, this shall give us 36, 875. 58, 750 divided by 2, this will give us 29, 375. While 51 to 50 divided by 2, this is 25, 625. That is the closing stock. And remember, the closing stock is the opening of the next month. Therefore, this 36, we put it here, that 6, 875, while this is 29, 375. Then remember that policy has to apply even in the month of May. In May, the closing stock must have been half of this 60, which is 30,000, which must be the opening of the month of June. So this is 30,000, which is half. So, and then, because of the balancing, to get the purchases, we say that the opening stock shall be deducted. So this is the purchases. So we deduct the opening stock. So this is in bracket. So that now we can apply and get our answer as follows. So you have 60,000 minus 30,000 plus 36, 875. This is giving us 66, 875. This is 73, 750, 73, 750 minus 36, 875 plus 29, 375. This is 66 to 50. While the last one is 58, 750. This is minus 29, 375 plus 25, 625. So this is giving us 55,000. Again, you can see that there are some months we are purchasing more than what is expected, and we are purchasing less than what is expected, depending with the policy of stocks. And that's all. So that is it about the purchases budget for both material P and material Q. And I hope you have seen how the function budget is as far as production, material purchases are concerned. That is all for that question. So we can try another question. In December 2012, question 5, part C. December 2012, question 5, part C reads that Kilim Limited manufactures and sells a single product. The financial year for the company ends on that 1st of December every year. The following data have been collected for use in preparing the company's quarterly budgets for the financial year ending that 1st of December 2013. 1. Sales forecast is as follows. Quarter, and you have units. Quarter 1, that's 2,000. Quarter 2, that's 40,000. Quarter 3, 24,000. Quarter 4, that's 2,000. Number 2, standard material requirements and cost per unit. Material, quantity in kgs and cost per kg. Material X, 5.0 kgs, 15 shillings. Material Y, 3.75 kgs, 12 shillings. Material Z, 2.5 kgs, 30 shillings. Number 3, the opening stocks are expected to be as follows. Finished goods, 3.2 or 3,200 units. Material X, 3,200 kgs. Material Y, 5,200 kgs. Material Z is 800 kgs. Number 4, at the end of each quarter, closing stocks of finished goods are expected to be 10% of the next quarter's sales requirements. Number 5, the closing stock of raw materials is expected to be higher than the opening stock by 10%. Number 6, sales for the quarter ending that 1st of March 2014 are expected to be 36,000 units. And number 7, as from 1st July 2013, the selling price per unit is expected to increase by 10% for the current price of from the current price of shilling 600. Required: 1, sales budget in value for each quarter. 2, production budget for each quarter. 3, material usage budget in units for each quarter. And 4, material purchases budget for the year in units and value. End of question. Now we require to show. So this being the, let's just begin here. So we begin with the sales budget up to the purchases budget. So this is number 1. So Roman 1 is sales budget. We have been told 4 quarters, so this is details. We can have quarter 1, quarter 2, quarter 3, and quarter 4. So we have the units. We are expected to sell this number of units. Quarter 1, that's 2,000. Quarter 2, 40,000. Quarter 3, 24,000. Quarter 4 is that's 2,000. Then we have the selling price. We have been told selling price is shilling 600 in note number 7. But from 1st July, it shall change to to increase by 10%. So 1st July is in the 3rd quarter. First quarter is January to March, then April to May, April to June, then July. So therefore here is each at 600, each at 600. But now when come to the month to July onwards, shall be increase by 10%. So this is going to be each at 660, each at 660. So that now you can get our sales in value as expected there. So you have sales in shillings in revenue. So you multiply this. This will give us that 2 times 600. This is 19,200 or 19,200,000. Yeah. Then you have 40 times 600. This is 24 million flat. 24 times 660. 24 times 660. 15,840,000. That's 2 times 660. 21,120,000. That's what you have. So this is 90,200,000. That's all about the sales budget. The next one is the production budget. So Roman 2 is production budget. So you still have details. We have quarter 1, 2, 3, and you have quarter 4. So production budget, remember we said that we start with the sales. This is in units, that's 2,000, 40,000, 24,000, That's 2,000. Then we have the opening stock, and we have the closing stock, which you have been told in the information number 3. The opening stock are expected to be as follows. So finished goods is at 200. This is the opening stock. That's 200 opening stock for the month, for the first quarter, of course. Then we have been told information number 4, at the end of each quarter, closing stock of finished goods are expected to be 10% of the next quarter sales. 10% of the next quarter sales. So here, this will be 10% of the next quarter is 40,000, which is actually 4,000. 10% of the next quarter is 24,000, which is 2,400. 10% of the next quarter, which is at 2,000, which is actually 3,200. And we have actually been asked, we do the production for each quarter, and you have been told already that number 6, sales for the quarter ending that 1st of March 2014 are expected to be that 6. So the next year, first quarter is going to be 36,000 units. In the next year, the first quarter ending March will be that 6,000 units. So we expect to maintain 10% of that. So 10% here of that 6,000, which is 3,600. Then again, remember the closing is the opening of the next quarter. So this closing of 4,000 become the opening here. This is 2,400 opening. This is that 200 opening. So this is going to give us the production. The production for each quarter. This is production. And like we said, that in the production, to get the production, the opening stock is not a production of this quarter. So we need to subtract the opening stock. So that now we can have our answers as, this is that 2,000 minus that 200 plus 4,000. This is that 800. 40,000 minus 4,000 plus 2,400. This is 38,400. Then you have 24,000 minus 2,400 plus that 200. 3,200. This is 24,800. And lastly, that's 2,000 minus the 200 plus that 600. This is that 2,400. That is what you have as the production as far as this question is concerned. Then we were asked the material usage budget in units and for each quarter. So you have material usage budget. So we have as follows. So this is Roman 3, material usage budget. We have quarter 1, quarter 2, quarter 3. Then you have quarter 4. Quarter 4. Such that the usage budget, we require to know exactly what is required. Should we produce the whole of this production? We have been given the units of the kgs for every unit. So what we do, we are going to have the production for every quarter, we multiply by the number of units. Like now we are being given there that we have material X, material Y, and material Z. So if we come to material, this is material X. So material X, the requirement is actually 5 kgs. So what we'll do in quarter one, we are producing 32,800. We multiply by 5 kgs. This is 38,400 multiplied by 5 kgs. This is 24,800 multiplied by 5 kgs. And this is the 2,400 multiplied by 5 kgs. And in that case, even if I want that per quarter, I would also want to know the total for material X, Y downwards. So this will give us a total of this material X we are doing. This is that 2,800 times 5, which is 164,000. 38,400 times 5, which is 192,000 kgs. 24,800 times 5, this is 124,000. 32,400 times 5 is 162,000. Then the total, if you add 124,000, you add 192,000, you add 164,000, this is giving us 642,000 kgs of material X. Then you come to material Y. So this shall be that 2,800 times 3.75. Then you have, this is 38,400 times 3.75. 24,800 times 3.75. 32,400 times 3.75. So this shall give us a total of, this is that 2,800 multiplied by 3.75, which is 123,000. 38,400 multiplied by 3.75, giving us 144,000. Then 24,800 multiplied by 3.75, 93,000, while that 2,400 multiplied by 3.75, giving us 121,500. That if you add to 93,000, you add to 144,000, you add to 123,000. This is giving us 481,500. Material Y. Material Z. This one is this is taking 2.5 kgs, 2.5. So this shall be 32,800 times 2.5, 38,400 times 2.5, 24,800 times 2.5, and 32,400 times 2.5. So this is going to give us that 2,800 times 2.5 is 82,000. 38,400 times 2.5 is 96. 24,800 times 2.5 is 62,000, while 32,400 times 2.5 is 81,000. When you add to 62,000 plus 96,000 plus 82,000, this is giving us 321,000. That is all about material X, Y, and Z. So if we want to know the total materials for every quarter. If these materials are actually homogeneous, the unit of measurement is the same, then we can now have this total of 164,000 plus 123,000 plus 82,000 plus 82,000. This is giving us 369,000. Then you have 192,000 plus 144,000 plus 96,000. This is giving us 432,000, where we have 124,000 plus 93,000 plus 62,000. This is 379,000. Not 3 but 2, sorry. This is 279,000. Then you have 162,000 plus 121,500 plus 81,000. This gives us 364,500. That even if you now add even across, like this one is 6, this is 642,000 plus 481,500 plus 321,000. 321, that is 21,000. This is giving us 1,444,500. So 1,444,500. That's what we have as total materials as far as the quarters are concerned, and as far as material X, Y, Z are concerned. Very important. But now the requirement lastly is materials purchased budget for the year in units and value. So for the year and in value. So we can just multiply as follows. This is Roman 4. We have material purchase budget. Now this one we have to do it in terms of materials because the price is for materials. So we're going to have not about quarters. So we'll have here details: material X, material Y, and material Z. So you can have it this way. So we are going to have here the usage first. This is material usage, which for material X across there we have 642,000. Y we are having 481,500, while Z we are having 321. So Z is 321,000. So we have the opening stock, then you have the closing stock. Now, opening stock, you have been told clearly in the information, we have been told there that information number 3, the opening of XYZ are, this is 3,200, 5,200, and you have 800. Then the closing stock, we have been given in the information number 5 that the closing stock of raw materials is expected to be higher than opening by 10%. So higher than opening by 10. So this is going to be 110% of that 200, 110% of 5,200, and 110% of 800. So that now we can have our balances as follows. This, of course, 1.1 times 3,200 is give us 3520. 1.1 times 5,200 will give us 5720. 1.1 times 800 will give us 880, of course, 880. Then this now will give us our, this is purchases. This is in units, of course. in units. So where we have 642,000 minus, remember opening stock is to be subtracted. Opening is to be subtracted. So minus, that's 200. We add 3, that 520. This is going to give us 642. 320. 481. 500 minus 5200 plus 5720. This is going to give us 482. 020. And lastly, we have 321 minus 800 plus 880. This is 321,080. Now, these are the purchases in units. We are told to show also in value. And therefore, we are going to have the prices that are being given in the information number 2. 15 shillings, 12 and 30. 15, 12 and 30. So if I say here, each at 15, each at 12, each at 30, I'll be able to get my total here. My total, which is now, this is purchases in shillings. The 642, 320 multiplied by 15. That is 9,634,800. 482, 020 times 12 is 5,784,240. Then 321, 080 times 30 shillings. This is 9,632,400. So which, if you add to the 5,784,240 plus 9,634,800, this will give you a total of, for the whole year now, 25,051,440. This is the total for the whole company for the whole year. This is our total material cost. And that's what the purchasing department requires to budget for the whole year to sustain the production of all these products and in the quarters 1, 2, 3 up to 4. And that's all. So remember, we have done the sales budget, we have units and we have value. The production, we do have the units that we need to produce. We do have the material usage, which is in terms of materials for the whole year, for each quarter, and also for the exact material. Then we have that material, what we require to actually purchase. We have done this purchase budget, and you have shown the quantity of materials and also the value of the materials because you have the prices. Then you also have the total for the whole year. And that's all about that question concerning the functional budget. So we'll proceed with lesson 3, where we'll still continue with the same budgeting until we are able to be through with the budgets. So for now, that is it. I wish you all the best as you make your trials and exercises so that you can be able to have more understanding in this area. So otherwise, all the best and God bless you.